Executive Magazine, independent thinking for the discerning mind.
I'm Natacha Tannous, and today I'm in New York City with Marc Malek at his offices on Madison Avenue. So Marc, you are the founder and portfolio manager at Conquest Capital Group, which is a successful alternative asset management of $500 million roughly under management. And you're also the chairman of the board of LIFE, Lebanese International Financial Executives. So prior to your current role here at Conquest, you were also on Wall Street. You were both at Salomon Brothers and at UBS. So what an honor to be here with you and discuss current event. If that's okay with you, I would like to divide this session into three main parts. The first part will be a snapshot of the markets in 2016. The second part will be about where to allocate our money today, which region or which asset class. And lastly, we'd like to discuss the Middle East economy, Lebanon, and LIFE, the Lebanese International Financial Executives Association. So I remember in 2015, we were saying, oh, please bring on 2016. We were looking at what was going on in China, the falling oil prices. We're looking at lackluster growth in Europe, emerging market FX, and then you also had micro events such as Volkswagen scandal. And then comes in 2016, we're still in volatile markets. January 2016 was also a shocker. So if you look, for example, just at Europe today, you see that the European Central Bank decided to lower again the rates and then to expand quantitative easing further. So what's going to happen in general to markets?
We're not even, the first quarter of 2016, and seems like we've seen enough movement to last us for the whole year. This volatility is going to be here with us for a while. I think after the big sell-off that we saw in 2008, central banks rushed in to stabilize the situation. Unfortunately, I think they've overstayed their welcome quite a bit. And right now, you have central banks trying to use monetary policy to fix problems that are completely outside of their control. Essentially, the power of monetary policy, I think, was almost exhausted, by the end of QE1 or maybe QE2. And everything we've seen since then, in a way, has been almost counterproductive. We globally, whether you look at Europe or whether you look at US or whether you look at Japan, we won't even get to China, but all these places have major problems that need to be dealt with from the fiscal perspective. Unfortunately, at least in the case of the US and to some extent in Europe, there is fiscal paralysis, either through, in the US, a Congress that can't agree on getting anything done, or in the case of Europe, the problem with the euro and all the different countries that need to approve whatever decision needs to be taken. So you have these central banks that are trying to put the Band-Aid over these situations, but it doesn't work. Negative interest rates is a very dangerous area that is not necessarily where the markets need to be now. I think a lot of these central bankers are treating the world markets almost like their economics labs if they were at a university. And we're playing, I don't want to say playing with fire, but at least from our perspective, and we have a window seat on what I call the plumbing of the markets. And what we're seeing is a lot of this plumbing is broken.
So if you're saying actually that negative rates is not necessarily the solution, you look at what the Fed is doing and is saying it will continue to do, which is to hike rates. Is that even a solution to do that gradually when you see the rest of the world that's not able to do that?
Look, the Fed itself was probably a year or more late in the tightening cycle. It ended up having to begin the tightening cycle at a very inopportune time. And frankly, a big part of if I look objectively at what's going on at the growth of the US economy, so we're talking roughly about a 2% growth. We're talking about going into a cycle of lower profits for companies, lower earnings. Does this really seem like a time to be tightening? No. But I think the Fed sort of boxed itself into a corner. And the last thing they want is to lose credibility with the market. They had set on this kind of stage. So they're going for it, and they tightened the first one, and we look like likely to get 2 more hikes or so this year. But look, I mean, again, I think these are details that are somewhat important, but really kind of miss the bigger picture, which is central banks. I mean, if you look at the Fed essentially has been inflating one larger bubble to deal with the previous one that they inflated that happened to blow up. So whether we're talking about starting with the LTCM issues, going to the bubbles of the tech world, going to the housing bubble too. I mean, each time one of these bubbles blows up, they go and inflate a larger one. And now we're at sort of the ultimate bubble, which is the government bond bubble. And that's why you're seeing a lot of back and forth and a lot of fighting, because literally if this goes, there is nothing behind it. There is no more bubble we can inflate to take us out of this problem. Exactly. And that's why you're seeing almost this desperate action.
But actually, you just mentioned more globally, there's been intervention from central banks globally. You mentioned Japan. Now, let's focus just a little bit on China. I mean, they're running out of tools, let's say. And what happens if, despite all their actions, we actually realize that China will falter?
From every single example in history that we've had, not a single one of those growth phenomena that have taken this path have managed to do a soft landing without a major correction in the market, whether it was the internet bubble, whether it was the Asian tiger economies, everything. You go back even the hundreds of years, and you look at from the tulip in.
So you expect anyway.
So you expect somewhat of a strong correction for China. It would have tremendous consequences. I mean, I think, and really, it factors in terms of our expectation of world growth. Each one of those growth things is connected to the other one. And as you deconstruct it, you have to deconstruct the effect that they all have on each other. So now we saw the slowdown that was happening in China. You can already see it in much bigger magnitude through the slowdown they're seeing in Latin America, in Africa. But really, if you get down to the Chinese economy itself, they've already ratcheted down their growth to a range of 6.5% to 7%. But China, you have to look at it sort of almost with two lenses. There is China as an economy to the world, but you also need to look at the local picture, the local banking, you have a lot of problems at the local level with the Chinese banks, with the lending practices, with all this. And typically, they haven't really dealt with them yet. Yeah. So it's sort of wait and see the effect of it. But we've all seen all the research and on the ghost cities of China. I mean, you can't just create growth by building up cities and having them sit empty for people to come into it. At some point, you need to actually start using that growth.
And actually, that leads us to the second part, which is where to invest. In the case of China, when we wake up in Europe or even here in the US and you see that China was down quite a lot, you see a lot of our sectors that are down as well because they're interconnected. Luxury sector is one of them, but you had the mining sector, etc. So when you look at all these events happening in the world, which sector do you focus on right now?
There were a couple of trades that I thought would be good this year. One of them was to be long volatility across the board. And the second one is to be short equity markets.
Okay.
We did both at the beginning of the year. Luckily, we benefited and exited a lot of these positions before this large pullback that we've seen in the market. But for us, it's almost time to get back in. If you look at the U.S. equity markets, we're essentially unchanged on the year now. Volatility, depending which asset class you look at, but you look at the VIX, probably we're down 15-20% on the year now, which makes, again, completely makes no sense. Look, I think if we just look at the U.S. for a second, we're in the 7th year of a bull market. Yeah. Markets have topped off over a year ago, and we've been kind of ratcheting our way lower. The earning picture doesn't look pretty. The economic picture doesn't look pretty, and we don't I think where we are now is is one of two outcomes that we're going to see in the U.S. Either a garden variety bear market, which would be completely normal given the cycle and given where we are, and given the growth numbers that we're seeing, or something more, which could be closer to, I don't want to say an 08 type environment, because that one was exacerbated by real liquidity issues, but sort of a more severe bear market. So, with every bull market, when it gets overextended, you get a lot of these misallocation of resources. And corrections in the market are the natural mechanism of the market of reallocating these assets to where they are best utilized. A lot with central banks, especially in the US, to some extent in Europe, but in the US, almost acting as cheerleaders for the market. I think they're really preventing the normal functioning of markets. And hopefully we're at a point this year where we will see that correction, and then at that point, I think we'll have tremendous investment opportunities because, again, we'll get realignment of prices to where it makes sense to get in.
Yes, and actually speaking again of this year and of the US, I mean, it looks like there will be a showdown between Trump and Hillary Clinton. I like that it makes you laugh. So how do you see this playing out? Because obviously, what are the implications if one or the other comes in? Hillary Clinton is clear, for example, on some sectors, but with being more broad, what do you think this will have?
You have to discount all the campaign rhetoric from what actually happens when somebody gets elected. In the case of Trump, it's enough of an unknown that I think there'll be some initial turbulence in the market. But you also have to keep in mind that the founding fathers of the US did at least one thing right, which is how they set up the power sharing structure. So regardless of whether it's Trump, whether it's Hillary, whether it's Bernie Sanders, whether it's a clown that gets in there, which is not too far in the case of Trump, but you really, in order to get anything done, you need to get Congress and the Senate behind you. And by having that sort of trio in the decision-making process, you ensure that there is a certain level of continuity to policy. To you can't just go off on a tangent and start imposing tariffs or doing So a lot of what you hear now is just essentially just campaign rhetoric. Trump is not going to put 35% tariffs on China, and not going to deport 12 million people from the country. So I won't worry too much about that.
So moving on now to another question, which is where do you see the euro-dollar? Where do you see the markets at the end of the year?
I wouldn't be surprised if we see a move back to about 1,500, 1,600, 25-30% correction. It'll be interesting to see how long it would take to get that correction. So we could be in a scenario where we can have that correction intra-year, and then by the end of the year be on our way out and a higher level, or it take a couple of years to get that correction, depending on all the other factors that are playing in. So I can't really say where we are at the end of the year without sort of knowing where we will bottom at some point. The dollar is a much more difficult one, and I've had a bit of a sort of head scratching on that one. But if I go back to money management or trading 101, whatever you want to call it, but we're going into an environment, we are in an environment which, by the way, is a very exciting and unique one, because it hasn't been since, I think, 1993 that we had the Europe and the US on opposite side of monetary cycles. Yeah. So in the US, we are in a tightening cycle. In Europe, we are on an easing cycle. And we're not just incidentally there. The US is tightening and pressing the gas, and Europe is easing and pressing the gas. So we're kind of, further.
And specific as well issues in Europe. You'll see that between immigration, which has also implication on their economy, and now we're a potential Brexit, whether yes or not. I mean, there's still talk, which affects the market.
So it's really almost really mind-boggling that the euro is where it is today. I mean, we got close to 113 yesterday, 112 and change, where theoretically it should be a lot lower than here. If you look at the euro, you have what I call the beta factors going against it, meaning low interest rates compared to the US, let's say in the case of the euro to the dollar. But also if you look at kind of the alpha factors, like Europe has a tremendous amount of problems, whether we're talking about sort of Greece and Spain and Portugal and all these things. So it's a currency that should have headwinds both from an alpha basis and as well as a beta basis. But so far, it's been resisting these moves lower, which is a bit shocking or mind-boggling. But you can't really butt head with the markets too long. At some point, I mean, the market is always right. Just trying to figure out why is it the case, or whether it's just the case of delayed reaction, or there is something else that we're missing on that one.
Shall we now switch to the third part of it, which is Middle Eastern economy, and then specifically Lebanon, and then life. So obviously the oil price fall that we had seen, especially in 2015, has led to increased tension in the region and clearly economic strain. What do you think would be the effect for the region or even for the world?
We're actually at an extremely interesting time when it comes to Middle Eastern politics as part of the sort of the global geopolitical picture. Since the oil shock of the 70s, the Western world has been living in fear of what it called peak oil, which essentially was almost like this Damocles sword held over the heads of Western economies, which is the ability of OPEC at any point to spike up oil prices about $200 and collapse Western economies. All that changed with the discovery of shale oil in the US and Canada. And not only that, but very effective ways of extracting it. So what we're witnessing now is almost like a dual battle, an economic one, as well as one over control and interest between sort of US and European policy that for the longest time was dependent on that oil, to a point now where they're not, and all that means not just in terms of economics, but in terms of politics, which countries they're supporting, which countries they're not supporting, and you're seeing the shift of alliances that is happening. The US, for the longest time, had two major interests in the region. You have Israel and you have oil. Yes. Oil now is a much, much lower interest than it ever was. And Israel is It's what it is. But what we're seeing now is almost like a pullback from the region because of what's happening on the oil price. Now, within that same picture, you have a price war that is going on between, Saudi Arabia on one side and Russia, and again with the oil producers. It's an interesting point about these the shale oil in this country is that whereas in the past, by going through these price wars, you were able to force a lot of weaker hands out of the market. The shutting off of these wells took a long time to get back into them. With shale oil, they also shrunk the time that it takes to turn it on and off, and the cost of turning it on and off. So there is always some cost associated with deactivating these wells and then bringing them back, but it's much shorter. So I'm not sure how successful this price war will be at driving a lot of these producers here out of business, but it's fascinating to watch.
Now moving on to Lebanon specifically. Yes, I know. So say tomorrow morning, because everyone says, oh, this is a problem, but we don't have a president. This could happen, but we need a president. So imagine tomorrow morning we have a president in Lebanon. What happens? Obviously, the garbage is not gone. So imagine the president calls you and asks you, what should I do? And in what priority?
Lebanon, in some way, it stopped acting like a country a while back. And it's almost like Lebanon Inc. And it's Lebanon Inc. with 6 major shareholders. You all know who they are. And it's a business. And, they occasionally fight about how to run that business and split out the proceeds of that business. But it's really sad that we've let the country get to the point. I mean, the way I look at it is this thing I call Lebanon Inc. is almost like a disease. Unfortunately, it's a bit like a progressive disease that we've had it for, I don't know, maybe 20, 30 years now. But like all progressive diseases, it gets to a point where you can't wait any longer.
Let's say you were in power. What are the first 3 things you would do, probably?
Let's think about what is the problem and then how you would fix it. Look, I've met with a lot of people in power in Lebanon, and a lot of time, people in the diaspora, we make the mistake of assuming that they just don't know in Lebanon what the right thing to do is, and that maybe if we tell them what the right thing to do is, then everything will be fine. Well, that can be further from the truth. Whether we're talking about the garbage crisis, we have almost, in the diaspora, we have almost 0 value added, because every major company that handles trash recycling and this has done presentations in Lebanon to all the right people. They all know exactly how it needs to be done, what needs to be done. If you look at the electricity, are we really getting boats out of Turkey and linking them to get us? I mean, we still live in the Stone Ages. They all know we still get stuck in elevator. I mean, we're still, at this day and age, getting, 6 hours a day of electricity. I know what the numbers are. The problem is an inability to make a decision, mostly because we have a lot of corrupt politicians, and mostly because if something doesn't get done, it's mostly because fighting over who's going to make more money out of getting it done. Again, Einstein's definition of insanity is repeating the same experiment and expecting a different outcome. We've had the same set of politicians for a good 20, 25 years. If they were ever going to do anything good, they've had a chance to do it. I think it's time that we get new leadership and we really start from scratch. It's very encouraging to see the grassroots movement trying to take back the country. Unfortunately, it's a grassroots movement that was lacking a little bit in a grander vision. They were angry. But you can't go and ask for everybody to resign and to destroy. I mean, you have to structure your ask in a way that is actually achievable. But it's very encouraging to see that level of movement, because ultimately that's how Lebanon will get saved, by its young people.
Yeah, and the young people or the young entrepreneurs that are today are also being helped by LIFE, the Lebanese International Financial Executives Association, of which you are the chairman of the board. What is the diaspora doing for these young entrepreneurs?
Look, LIFE, first and foremost, is a networking organization for Lebanese in finance. Luckily, there are a lot of us, and many have been really successful. So when you put that network together, if it's truly successful, I feel like it's incumbent upon us to give back. So the way we try to have the network give back is on two levels, a macro level and a micro level. So on the micro level is where we concentrate on the individual Lebanese. So we want to make it easier for the next generation of Lebanese who want to go into finance to do so. We do it by giving scholarships, by giving mentorships, by doing all that. The other pillar where we try to kind of help Lebanon on a macro level is essentially by trying to make Lebanon a better place for business. At LIFE, we're very apolitical. We try to stay away from that side of the paralysis in Lebanon. But even within some of the projects we're doing for LIFE, you hit certain barriers where it almost feels like one hand clapping. We need somebody else to sort of clap with us. Simple things like, simple things like internet. If I'm going around the world meeting with people and convincing them that we have an unbelievable talent pool in Lebanon of very smart, engineers and lawyers, and that, the world is flat, and rather than hiring them for thousands of dollars or pounds in New York and London, you can hire them in Lebanon and you can save a lot of money. Well, I can't at the same time make that pitch, but have to turn around and tell them that we rank second to last or last in internet connections or internet speed in Lebanon. You need to have those reforms in order to help the country. So, we try as much as possible to get things done without being mired in the paralysis that happens on the political side there. But even within the effort that we've been doing, we've identified maybe about 15 to 20 laws that we need changed. Nobody will make money on it. No one will benefit. This is, not pro-March 14 or pro-8 or anything. These are things like a bankruptcy law, things like, that will just move the country, one step forward. But again, look, if you can't get the parliament to meet, you can't get them to vote on a new bankruptcy law or anything like that. So it's, again, that paralysis.
Well, Marc, thank you very much for your thoughts today and your insightful comments. It was a pleasure to be with you here in your offices in New York.
Executive Magazine. Independent thinking for the discerning mind.